Hi, my name is Kenson and I'm your speaker of the day. And then today's topic is about loan applications. Alright, it's a very critical part of becoming a real estate agent when you're involving in sales. Because of what? Without loan, okay, your cases couldn't complete. Okay, and then you cannot get your commissions. So it's another critical part that you will need to pay attention at. All right, so let's see. When we have a sales booking, when you close a sales, the next follow-up action will be the loan applications. So here is about housing loan. So there's three things. Okay, first thing is your loan documentations. Okay, you will need to know what are the loan documents that is needed. Okay, loans documents that is needed for loan application. Okay, and then we will look at to DSR. What is DSR? Okay, debt servicing ratio. We need to know how to calculate the DSR. Okay, so that we will know whether or not the prospect or the customer is entitled to get loan. All right. Last will be CCRIS. Okay, so CCRIS report. Okay, CCRIS report is a report that's showing whether or not this customer have a very good paying attitude. Okay, so these three things we will need to learn from this today's topic. All right, so let's see. Let's see in the table, or you can see in the our slide there. So we talk about loan documents first. Okay, for an individual under employment, all right. So there are few things that you need to gather for the loan submission. All right. Okay. First of all, house title. When you involve in what we so called, and when you involve in sub sales, you will need to prepare for the house title. All right, and then next will be the booking form. All right, and then will be IC, and then the latest salary slip. Okay, for fixed income earner. Okay, fixed income earner, which means they will involve no commission. All right. You at least provide 3 months salary slip. All right, but if the career involved or the income involve any commission, all right, then you will needed 6 months. Okay, you need to collect 6 months salary slip. So this one is the first document, and then second come with will be the latest bank statement. Okay, which tally with the salary slip. Okay, for example, if you provide January until June, all right, so your bank statement also have to show January until June, and then the amount of the money, okay, must be tally. Okay, which means if you have your income 10,000, then your bank statement have to show 10,000 as well. All right, so the third one will be the EPF statement. So some of the jobs they involve EPF, then they need to provide EPF statement as well. Also same tally with the salary slip. All right. So for those who cannot prove or couldn't tally with the salary slip, they will not consider it as an income, as a it's at the what we so called, they cannot prove their income source. So that will make the loan application more difficult. All right, so have to take note on this. So that is the basic documents that you need to collect. You will still need to talk with the bankers, see whether or not they require some additional documents. All right, so work closely with the bankers. So some supportive documents like FD and some bond, if you have, you also can provide to the bankers. It might help. Okay, it might help to get the loan faster. All right. So next will be individual under self-employed. Okay, for those like insurance agents, mutual fund consultant, right? So they will involve they consider themselves as self-employed because they have 100% full commission base. All right, or some business like sole prop. So what are the documents that we needed for those individuals under these categories, right? So for house title booking IC is the same, it remain usual. So next will be the SSM, Form 24 and 49. If they have, okay, you need to ask from them. And then latest 2 years income tax with receipt, which means the income tax statement that you submitted, you need to pay for a certain amount, the income tax, okay, that charged you. So you need to pay, right? So you need to have a bank statement or payment proof that proven that you already pay for that amount, okay? Only that your income tax statement is valid, which means you already paid for it, okay? So at least 2 years, all right, to make sure the income tax statement is valid, all right? So next will be the latest 6 months of the current bank account. If you have, then you need to provide 6 month current bank account. So last will be the EA form, okay? Let's say for insurance agent, you can get EA statement from your company, all right? So that they will prove total how much commissions they already paid to you for that particular years. Then you can include it into your income tax, okay, to prove your income, okay? So that one will be individual under self-employed to prove your income statement. Of course, those supporting documents like FD, you still can submit up for the bankers to get support, all right? So, but it's not meant to support only, all right? So that one is for individual. What if you involve the customer going to buy the property using company, okay, using company, that involve even more documentations, okay? So you can check the list, okay? We already list down in the slide as well, but here I will go through. So house title, yes, but instead of personal IC, here you will need to get all directors IC, okay, all company directors IC. And then next will be the Form 24, 44, 49 M&N for Central Berhad, all right? And then your business license and your registration of business, okay? All these things you need to prove, all right? So if they are going to buy property using company, right? So they will need to have 3 years audited account, okay? Which means the company has operated for 3 years, at least 3 years, all right? So because they need 3 years audited account, okay? Without 3 years, they couldn't buy a property using company, as at least or except they want to buy it in cash, okay? Then that wouldn't needed anything. They would need 3 years audited account because they involve no loan applications, all right? But if they want to get loan, the company must operate for 3 years, all right? So next will be directors Borang B. Each of the directors, their income tax statement, Borang B, all right? So the last will be 6 month bank statement, okay? 6 month bank statements, all bank, okay? Involve all banks, you need to provide. And also the those profit and loss statement, those balance sheet, okay? These all things also have to be provided. And then and also, yeah, also debtors and aging, creditor aging. So the bank also will need to know whether or not your company is owning people money or how much people owning you, okay? So this is what they needed for the bank to approve the loan for the company, all right? So a lot of things, okay? So these 3 parts, when you come across in loan documents, you will need to know the basic things that you need to inform your customer first, okay? So that they can gather their documents in a shorter time, all right? So next, we will need to see DSR, the customer. Okay, DSR stands for debt servicing ratio, okay? Is to determine the capacity of the potential borrower, okay? To take on a new mortgage, okay? So whether or not they are entitled, in simpler terms, is like whether or not they are entitled to get a new mortgage loan or not. All right. So in here, you can see the formula here to calculate the DSR rate will be total monthly commitment. Yeah. Divide total net income. Alright, so here, based on here, you will know the DSR rate. Okay, so what is the commitment we consider here? Okay, first, your housing loan, and then your hire purchase within your car loan, your personal loan, alright, your credit card. Okay, you have using any credit card, yes, it's your commitment as well. And then your PTPTN, alright. So all these will be your commitments here. Okay, so when you add it all, you will have a total monthly commitment. Okay, so you will know, and then divided by your total net income. So what are the income that we will consider here? First, your basic salary. Okay, second will be the commissions. Okay, and the rental income. These three. Okay, if you provide any of that, then you can calculate here as your money income. So based on here, we will see whether or not you are entitled to get the loan or not. Okay, for example, let's say I'm having a car loan. Okay, monthly installment is 800. All right, and then I'm having a personal loan. All right, monthly is 750. Paying 750, and then my credit card balance is 10,000. Okay, so how to calculate monthly if my credit card balance is outstanding balance is 10,000? So from here we will need to calculate a 5%. Okay, which means it's 500 if my monthly commitment here, credit card. All right. So and last but not least is my PTPTN. So my PTPTN is paying like 300. Okay, so this is total my monthly commitment. All right. So does utility bills consider commitments? No. Does insurance premium consider money commitment? No. Okay, that one is involving in what we so call not in the fixed commitment terms. All right, you are not involving in any financial institute. No. But in insurance wise, insurance is what we so call tools. Okay, it's a financial tool to increase your wealth or protect your wealth. So it's not a commitment. All right. So here, my total commitment will be 2,350. Right. So if let's say my income, total income is 5,000. Okay. Let's say my total income is 5,000. So how much is my my commitment, my DSR? Like 2,350, right? So my income is 5,000. So it's roughly 48%. Okay, it's roughly at 48%. So this is my commitment. Okay, my commitment, my DSR for current commitment. Okay, what is so called? If let's say my new house, okay, my previous 800,000, my new house is cost me monthly commitment will be like around 4,000. Then definitely it bursts already because my commitment is more than my income. For example, just assume, all right, my new house will cost me 1,000 installment. Okay, will cost me 1,000 installment new. All right, so this one will need to add in to this. So my commitment will be 3,350 in the new terms, divide by my 5,000. Okay, so roughly will be at 68 to 69% of my commitment. So based on here, I will need to see whether or not I'm entitled for the loan DSR. So there will be a chart. Okay, so you will see the standard DSR rate by banks. Okay, so If your income is less than 2,000, okay, the maximum DSR is 50%, which means if your commitment is more than 50%, the DSR rate is more than 50%, then you are not entitled to get the loan. All right. So based on the chart, if let's say my income is 5,000, which is in the categories of more than 3,000 but less than 6,000, okay, my DSR rate, my allowable DSR rate will be 70%. So which means if let's say my DSR rate is not more than 70%, then I'm entitled to get what? To get the loan. All right. But this one is a standard bank rate. Depends on the bank. Different banks, maybe they will come across with like 70 to 75%. Okay, it depends. Okay, so let's say if my DSR rate is up to 80%, then you are hardly to get the loan already, because you already burst your DSR. Okay, anything more than 80%, then definitely you cannot get already. All right, so you have to clear about this. So when you're doing sales, when you get booking, you need to fact find some of the commitment and also the income, so that you can calculate by yourself first roughly what are the DSR rate, whether or not your customer is entitled to get loan. Okay, let's say your customer bursts in DSR. So what can you do here? First thing, maybe you can ask your customer to reduce now the credit card outstanding balance, so that they can reduce the money commitment. Second thing, they can join in. Ask your customer to join in, so that the new commitment here can be reduced, so that the commitment here reduced, then your DSR will not be so high. Okay, if you add in new join in purchaser. Or last one will increase your income. Then the DSR rate will be different. So three basic things that you can help your customer to adjust, so that the DSR rate will burst. All right. So after that, after you have the valid documents, after you check the DSR, everything is good to go, then the last part we will need to see will be the CCRIS. Okay, CCRIS is stand for Central Credit Reference Information System. All right, is to trace your record, your behavior, your repayment behavior. Okay, whether or not you are paying those commitment accordingly. All right, so it's a report. Based on the slide, you can see the report. All those commitments here, commitments here are in the report, and then there is 12 or 13 columns on the right hand side. You will see that one is your monthly payment behavior. So 0, if you see your table, if you see the report there, if written down 0 means you don't own the bank or you don't own the financial institute anything. Okay, you pay very good accordingly. Every month you also 0. Okay, means every month you also pay on time. Okay, but what if there is 1? Okay, there's a number 1 show in the table. Okay, show in the report, means you own the bank, you late payment for 1 month. Okay, you got 1 late payment. Okay, but if involve 2, okay, number 2, then you involve 2 months late payment. Okay, so any above 2 you couldn't get loan already. You consider blacklisted. All right, if you have 3 in this report, you cannot get loan. So some of the bank, if you have 2, you also cannot get the loan already, because that one proven that you have a bad repayment attitude or behavior. So most of the time, bank won't choose to approve the loan for you. So if you have 1, you need to clarify why you have 1. Okay, you need to clarify it out. All right. So in here, there's only 2 options if you involve in late payment. All right. So 1, either you clear whole, what we so called, either you clear the whole commitments out, or you need to repay back. Okay, nicely 1 year. okay, continuously 1 year later, then your record will become clean. Then only that you can go for loan application. Otherwise, you cannot get application. So 3 things very important: whether or not your customer have a valid documents, and then is your customer entitled to get loan, and then last is the customer repayment behavior is nice. Okay, by these 3 things is a crucial things that decide whether or not your customer can get loan. Okay, so if 3 things also very good, then I believe your loan will be out soon. Okay, will be no problem. So after this, after today's class, I believe that you already know how to ready your customer to go for the loan applications. And then that's all for today. I shall see you in the next class. Bye.